A little deeper into the woods here. We're going to talk about agency building with Equus. What we described in the previous 3 videos was how personal production can change based on lead types and getting to A leads and what that actually means. I have that last example here where you're buying 33 A leads, you're creating $30,000 in premium per month, and after 2 years, you're running an average run rate of about $17,000 net per month into the bank, plus the refund you're going to get on your leads at tax time. So this is about a $250,000, $260,000 net deposits in your bank business. That's as a personal producer. The really cool thing about businesses like real estate and insurance is that you can, in most cases, have the opportunity to grow, build an agency, and create what's called spread. Spread is the difference between your contract rate and your agent's contract rate. So as you bring agents in, typically they're coming in at 70% in the Equus scenario, and you're going to grow your contract rate over time as we described in previous videos, and that's going to create a spread. So what I'm going to do here is talk a little bit about how you can take advantage of that. But as an assumption, I'm going to tell you what the Equus average is. If an agent writes a policy, the average they're going to write in a month is 3. If they write 1 policy, the average agent writes 3 total. So that includes lots of people that write 1, and that includes people like Brandon Hall that write 40, 50, 60. But the average writer writes 3 policies, so that's the number we'll use. And what I'm going to do is I'm going to add 1, not there, but here, 1 new writer, 1 new contracted agent that actually writes an app, and they're going to write 3 per month. And then I'm going to come down here, and what I've done is I've opened up this new section that shows the agency. And you can see here we have team sales, and beginning in month 3, I've started to add an agent per month. It gives me 10 agents at the end of the first year. 10 writing agents. These are agents that actually write at least 1 policy. They're going to average 3. So some will write 10, some will write 1, but this is going to give me an average of 3 per agent that writes. This gives me a new agent APV that gets added to my team APV, which counts towards management promotions, which we're not going to talk about today. But here you see the spread. So this is the percentage difference between your contract rate and the agent's contract rate, which is calculated at 70% in this scenario. Understand, some people say, well, what if their contract rate goes up over time also? That will happen. So this is not a perfect scenario. I'm using 70% for all the new agents that are writing. Some will write higher than that. So your income will be a little bit lower than this. But the average spread is about 20%. So I'm going to use the actual spread here for simplicity. So here's the total spread that you get in a given month, and here's the spread after persistence change, as we discussed in previous videos, and you'll see that you've got a $36,000 increment to add to your 139. So after the first year with an agency, you'll have $175,000 in net deposits, plus the money you get back from your lead investment, which will add maybe another $40,000 into this total. So here you've got somewhere over $200,000 net deposits in your first year by starting to build the agency. Let's go back and down, and here's what happens. It starts to really compound in the second year. I'm still adding 1 agent per year, 1 agent per month. This is the number of apps they're writing. Here's the APV they're producing. And here's the back end spread, because now we're getting months 10, 11, and 12 into the mix from their business. Here's the total spread for the agents, and that produces a spread after persistence of $239,000. So now you add that 239 into the 204 that you had adjusted for persistence, and you're up to $400,000. Connor Jones kind of numbers, $400,000. Feedback in your lead tax return, and that'll get you up to close to $500,000 in net deposits by building an agency. This is simply by adding one agent, one writing agent to your team every month. So if you're wondering what, this is ultimately the objective here, is to do what people like John Kite have done and Scott Rumbo have done, and build a situation where they have, relatively speaking, permanent passive income. Ultimately, you're building a team, you're running a team, you're managing the agency, you're coaching, teaching, and leading, and doing a lot less sales work, a lot less of your own work, and working on building the agency to create permanent passive income. This income right here, this spread, after persistence, you have no lead costs here, so you're not getting nothing added back into this. But this is a very, very, very attractive net deposit business, independent of your personal production. So here's, we actually see we have about $20,000 per month in passive income, passive. So that's how you build an agency, and that's what the numbers do to you here. You can see, I'll even spread this out one further so you can see how it actually works. You got all this money coming in on the back end, plus your upfront spread on the front end. It can be pretty attractive. Okay, that's it. Now you understand what the impact is of potentially building an agency with the Equus ecosystem. Take care.